or we overhit it. It doesn't surprise me that we were kind of just even. Again, I don't think before the election, I don't think anyone wants to, was it rustle the feathers? I don't think anyone wants to do that for election. If anything, we'll see a revision next month that says, oh yeah. We'll see though. There was one bit of positive news. The market didn't really react from it, which kind of, we've been talking all week about, we don't trade fundamentals here in the live room, but we do pay attention to them. And we've been talking all week about kind of how to, the markets don't move necessarily off of the numbers. I'm going to get short here again, euro dollar in the syndicate. This is the position we had on before the non-farms. Markets don't really move off the number. They move off the reaction of the market. And, we did see some good news today for the dollar. Average hourly earnings was up, which is a positive. We didn't quite see a positive reaction from it. So I don't think there's too much of a bullish dollar sentiment in the market. So we'll see. But as Gabby said, it was basically a bunch of nothing that happened. Usually we call it the fireworks show. You could expect the market to go crazy, and we just didn't do that. So good for us. It doesn't ruin our charts. Stefano says, Akil, I exited New Zealand dollar, but it did not move. Should I consider entering again? That's only a question that you can answer. I would say this, and you saw me just do this with the euro dollar here. Obviously, I take my positions off when gearing up for the non-farms, right? If there was no movement like there was today, typically there's a spike up or a spike down. If we kind of go back to where we started, I'll re-enter my position. Now, I can't tell you what you should do. I got short again, New Zealand dollar, because we didn't really see any movement. So I'm treating it just like, hey, the news event kind of never happened, but that is up to you. I don't see any downside in doing it. We didn't spike up. We didn't violate any highs. We didn't violate anything based off the news event. So I don't see any problem with re-entering it. And again, I did that here on the euro and New Zealand as well. Taj says, I stayed in the pair New Zealand dollar, but will most likely close out election night. Remy says, I stayed in New Zealand dollar as it was a swing trade. Plus, I don't factor into the news when back testing. And for you guys on YouTube, I apologize if I'm not paying you attention. I'm going to try and glance over there as much as I can, but just understand that the main commitment here are the members of my live room, the members in our syndicate that are joining us here. So again, I'll try to join in when I can, but just don't feel offended if you keep asking a question and I don't see it. You're on a far screen to the right. But I do really appreciate you guys coming here. All right. Gabriel said, I placed 2 protective stops, 2 got closed. Nothing seemed to work. Yeah, I tell you what, it's been a rough week. A lot of traders are saying that. I see it on the YouTube chat. I see it here in the live room. It has been a rough week. If it helps you, it's been a rough week for me. I'm not sure how Charles has been doing. I know I just added up our syndicate stats for the week, and we've had one of our worst weeks of the year, mostly on my behalf. I've won a single trade this week, and I've lost about 6, I believe. And I'll show you guys the New Zealand dollar trade we're still in. Bring that back over for you guys. You can see it. Deep Gartley formation right up here, what we're looking at. But yeah, it's been and I can tell you what, there's when drawdowns come, there are always 2 questions that we want to ask ourselves. This is something very important that we go over with our traders. There's 2 types of drawdowns. Do you guys know the 2 types of drawdowns? YouTube and or live room? Yeah, and I don't do broker recommendations, guys. It's just for legal purposes. I try to give myself some safety. You'd be surprised what people try to sue over. So I don't get into brokers. Yeah, I don't want to be the one where you go with a bad broker, you lose all your money, and then I come back and get sued because I recommended it to you. But the 2 types of drawdowns, guys, there is a natural drawdown and a self-inflicted or self-induced drawdown. A natural drawdown is one where you're following your plan, you're taking good trades, right? You do your trading review, hopefully, You do your trading review. Each day, each week, each month, you review your trades. You say, you know what? Everything I took was good. I followed the plan. It just didn't work out. Maybe I'm a pattern formation trader and we were in very directional markets and they just got blown up. It happens. A self-inflicted drawdown is one where you're making mistakes. So and there's hundreds and hundreds of mistakes I can name for you, but maybe you're taking trades you're not supposed to be in. Maybe you're taking targets early. Maybe you're moving stops back, something where you're sabotaging your system. So the first thing you want to do when you enter that drawdown is you want to figure out which type of drawdown it is. Am I sabotaging myself? Am I doing something wrong? Or is my system strategy is just not working with the markets this week? And I'll tell you what, if you're doing everything right, if you're trading your plan, if you give yourself an A+ grade for following your rules, then you just have to shrug it off and say, hey, it's natural. What goes up must come down, right? You guys have seen the equity curve. Our equity curve isn't a straight line straight up. It ebbs and it flows, right? It ebbs and it flows. If you're sabotaging yourself, that's when you need to start making a change. If you're doing something to limit the amount of profitable trades you take, or if you're doing something to put you into a bigger deficit, then you need to identify what that is and fix it. But I'm in a drawdown. It happens. I'm used to it. I've been in, if you can imagine, I've probably been in 1 or 2 drawdowns before in my trading career. It happens all the time. They get easier. They're frustrating no matter what. But once you understand that they're part of the process, just like losing trades are part of the process. I lose almost as many trades as I win. It's part of the process. You kind of get numb to it. It does stink. But what's beneficial right now, and again, I can't speak for all of you. I can speak for myself. I can speak for Charles, is we're 11 months into the trading year, right? We're having a good year. Not as good as last year, but we're having a good year, right? I highly doubt, knock on wood, that we're going to blow all of our returns in the next few weeks. So think of it like a sports team, or like a sports team that has a winning, we have a lead going into the last quarter, or going into stoppage time, or going into the last half. Not like the Chicago Cubs a couple nights ago where they let Cleveland come all the way back. Not like that, hopefully. But we have a pretty healthy lead. And we have to think to ourselves, as long as we are doing what we need to do, we're not going to blow that lead. We're only going to blow that lead if we make mistakes, if we start trying to overtrade. If for some reason Charles isn't happy with a 40% return or 50% return, and he's like, I want to get 80%. We have to match last year. And Charles starts finding new pairs to trade and doubling his exposure. That's when we start making mistakes, and that's when you start losing some money. Great win by the Cubbies, by the way. I was rooting for the Cubs. So you Cub fans out there, congratulations. I wrecked myself staying up for that game. I'm a pretty early sleeper in this industry where I'm up pretty early in the morning. I try to be in bed by 10 o'clock. And that Cubs game went to like 12:30. It was 12 o'clock, and then the rain delay happens. I'm like, son of a no. Luckily, it only happened for like 15 minutes. But I was like, you're going to do a rain delay in the 10th inning? Come on, man. But great game. All right. So for you guys that are new, this is the New Zealand trade that we're looking at. We're looking at New Zealand dollar right here. We had a very deep Gartley formation, depending on your data. And what I mean by that is, for us, right, this is our B leg right here. If our B leg touches the 786 Fibonacci retracement, that changes what we're looking at from a potential Gartley formation to what's called a butterfly formation. Now, in this particular case, depending on how you trade the butterfly, it's going to be completing in the same area. But I'm not a butterfly trader personally. I don't like that pattern formation for various reasons. Doesn't mean it's not a good pattern formation to trade. Just not a fan of it based off my philosophy on structure and how the market moves. But we had a very deep Gartley formation because I just missed on my data, right? My data, just missed the 786. So we had a Gartley completion all the way up here at about 73.28. Front ran my orders a little bit, got involved at 73.23. And now we're just waiting to see if we can hold. Looking left, you can see we identified a level of consolidation. So the market essentially came down, and then we went sideways in this little wedge type formation before breaking out to the downside. So we're going to see if we can hold this level and get a move back down to our 382. Now, stops, depending on how you play stops, I'm pretty forgiving with stop losses. I don't like putting really, really tight stops on it. I like giving the market room to breathe. So I have my stops up here above this structure level. If there's one thing I learned in my many, many years of trading, there are lots of things I learned, and typically I learned them the hard way, meaning I donate money to the market to learn my lessons, AKA losing trades. When you have two levels of structure that are close to each other, you can see one right here, one up here. Well, I'll ask you guys, what do we typically want to do in this type of scenario when we have two levels of structure, whether it be support or resistance lining up in the same area? Which is the level that we want to be aware of? Hey, Akil, I recently bought the DSR indicator. Very helpful. Can you tell me what settings you use for strength and support and resistance definitions? Because my settings are different from yours. What do I have here? DSR. Strength is 8. Here we go. I typically don't default from go from the default ranges. So I have a strength of 8 right now. This is a daily. I have this DSR based off the daily. But yeah, when we have two levels of resistance or support, typically the higher one, or the one that's further away, is the one that's going to be more important. Stop losses that are here are typically tickled, typically teased, and taken out before the market reverses. So I always want to give myself a little bit of safety. So we'll see what happens here. Technically, this pattern formation is actually invalid. Now that I look at it, we did have a higher high, higher close, although this is, I consider this a false breakout because we had the higher high, higher close followed directly by an engulfing candle. But if you want to gain some confidence, what are you guys seeing here on the price chart? What does this look like for you guys that are familiar? Gabriel says 8 was messing with my brains. Charles figured that out. He brilliant. Yeah, I mean, when you're messing with, if you're going to mess with the settings at the DSR level, just have them to your liking. If you want more aggressive DSRs, put it down to 5. You want more conservative ones, bigger ones, put it up to 13. Yep. This is called divergence. This is called divergence. This is I look at this as being called a rising wedge pattern or rising wedge formation. I got to get some new words that don't have the same sounds. I typically look at this as a rising wedge formation. So typically when you see this, it's the market having gives you a lot of momentum to the upside, and then the momentum starts to slow. Can you guys see the difference in slope here? Meaning we have a sharp move up, and then we're still going up, but it's kind of the slope is getting smaller and smaller. You mean yes if you guys can see that? And I know many of you are going to critique me on names. Honestly speaking, I don't really care if these things are called. They're all consolidation patterns to me, as long as I know what it looks like. So some people may say, hey, this is not a rising wedge. This is a something. I don't really care. As long as I know what I'm looking at and I know what it means to me, that's all that matters. No, because you do get different terminology with different traders, and there's nothing wrong with that. But you have divergence. This is called bearish divergence on the RSI. Divergence is when your indicator or oscillator is doing something different than what's on the price chart. So you can see here on the price chart, right? Price action is moving up in an upwards channel. On the RSI, our indicator, right? Price or the RSI is moving down in a downwards channel. So this is typically a sign that the market's running out of steam, and we should see some type of relief here. Now, does it just because the RSI is showing divergence, just because we have a rising wedge, does it mean that price must go down? What do you think? I'm new to trading. I've been trading for 4 months now. What is your philosophy on trading? How do you distinguish the different trends? Giancarlo, if you go over to our website, tradeempowered.com, there's a great free training that we have. He said free, right? Free training that we have called Into the Gray. If you watch that, again, tradeempowered.com, just click the Learn to Trade tab. If you watch Into the Gray, it's a great free training lesson talking about our philosophy on how to read a price chart. So identifying new structure highs, new structure lows, and reading a trend. So make sure you check that out. Yeah, so it doesn't mean that it will go down. But again, everything we do is we're just trying to make educated guesses. We're just trying to make educated predictions. Now, there is one thing that I don't like about this pattern formation, our targets, because we had that such of a deep B completion or a B leg, our targets, we've got to break through a pretty decent level of structure here to get the targets. So that's a negative, but there's not much we can do about that. Not much we can do about that. Kiel, if you missed it, double top, double bottom at market presents a 26.18. I know you don't take 618 on what pair are you talking about, Bonnie? Double top, double bottom at market on let us know what pair. If you guys are new to the live room, if you're going to type in ideas, just do us a favor. It makes it a lot easier if you just type in, just make sure you type in the pair and time frame. So just in case I can't see it, it allows other people to do it. Just a regular creation. If you missed the double, okay, if you missed the double top, I got you. I thought you were saying I missed the double top or double bottom. If you missed the double top or bottom at market and it presents a 26.18 trading opportunity, another free training we have for you guys that haven't been to the Trade Empowered website, shame on you. I know you don't take it on the 618, but what entry reasons will you use to enter? I prefer to look for a lower low, lower close entry. That's what I did with the euro dollar here. If we go over back to euro dollar, now euro dollar, we'll start with our top down analysis. It technically wasn't a 26.18, but it was the same type of concept. And 26.18s are essentially, it's a more defined way of a trend continuation trade, right? So we look on the euro dollar. Euro dollar has been ranging for 2 years, right? What used to be a great pair to trade has been blah. We've had some good advanced pattern formation trades here on euro dollar. Consolidation often yields advanced pattern formations, but anything else, counter trend continuation trade, it's been a desert, which stinks. Again, look at this. I think I did a video on this a couple weeks ago about how this is maybe last week on we've just going sideways. But here's our recent move on euro dollar, right? What did we, and this is kind of called our identify, predict, decide, execute thought process. What did we just do here on euro? Now we do have structure below, right? So we want to keep that in mind. But what did we just do here? This level, what is this called? This is identifying what the market is doing, right? Lower low, lower close. Again, this is stuff that you can learn about by watching Into the Gray. Lower low, lower close. So we identified, we just put in a new structure low. Price action started giving us a retracement. We know that when we're looking for retracements, they typically come to where? Where's the first place we look for some resistance when the market's retracing? Structure. Look left, structure leaves clues, right? And if we look left, we have this nice structure shelf right here, right? Can everyone see that? Market bounces down, finds support, boom, back up. Down, support, boom, back up. Support holds for a third time and then finally flushed out, right? So if this was a level that the market respected in the past, we can make the prediction. Again, everything we do is a prediction. Whenever we get a new traders in the room, they're, well, how do you know it's going to go down there? I don't know. Trust me. If I knew exactly what the market was doing, I would bet everything on every single trade. I bet the car, bet the house, bet the kid. I bet the next kid. Oh yeah. I'd bet the next kid. But we don't know. We just make educated guesses. But if this is a level that price action showed to respect before as support, once support is broken, it becomes resistance. This is a level that we want to look at for a potential retest. And for you guys that trade gold, I think we have an identical situation setting up on gold dollar as well. So we're looking at this level for a potential retest. I'm not expecting a full trend continuation, guys. Again, we've just been going sideways. So there's nothing here that says euro is going to go down. But if I'm looking for a trading opportunity, this is going to be the first place I look for. Now, I'm not aggressive. I'm not going to say, oh, just put a sell limit right here. Because guess what? If I put a sell limit right here, if I just sell it right here, no confirmation, just do it. Boom, hit the button. Right? Let's do that on let's show you what it looks like. I got to get targets back on there. I got to check my notes on where targets were. But let's say we just sell it at market. Boom, right there. Based on price action being at this level. Where do stops need to go? Always these advanced pattern formations are not hitting my buy sell limits, and by 40 pips, I am missing limits. I back tested around 100 times, the same 40 pips. Interesting. Can you please explain? I don't know. I'd have to see what you're doing. The first thing I'd have to do is make sure you're trading them the correct way. If you're missing them by 40 pips, I'd have to question maybe where your targets are going. But it's maybe you're taking the wrong type of targets. It's hard to say just by that. I'd have to really work with you and see what exactly you're doing wrong. So I'd have to see what type of trades you're taking, why are you taking them, where you're putting targets at, and evaluate that way. So I'm sorry, but I just can't answer that question. I would say this: if it didn't work in your back testing, don't trade it live. If it didn't have and that goes for any system or strategy. If it didn't have a positive expectancy in your back testing, don't trade it live. But it's hard for me to answer that question with that limited data. Sorry. But if I just enter aggressively right here, right, my stop loss, right, probably has to be up here, right? This is our most recent level of structure, right? The safest place to put a stop would be up here. Would you guys agree? I'm not saying that I like it up here. Not saying I like it, but this is the safest place, right? Now targets, where are my targets going to be? And I see you guys, you guys are clocking in on YouTube as well. Previous resistance, well done, well done. Targets, retest of structure lows here, right? Again, we're in consolidation. I have no expectation that the market is going to follow through here, right? We do have support looking left right down here. Now, does this look like a risk reward that I want to be involved with? Is this a good risk reward, guys? Let's draw a colorful box on there for you. Risking this much. To gain this much. Oh yeah, right? No? No? Thank you, guys. Thank you. Right? Probably not. Now, again, for me. Now, if you're a trader with a very, very, very high win percentage, what's going on, Alan? If you're a trader with a very, very high win percentage, then yes, if you're an 80% trader, you can afford to have this. Because when you win 80% of the time, right, you're going to win 8 out of every 10 trades, essentially. So you don't have to worry about having an inverse risk reward. A perfect example is the cipher formation. Why is the cipher formation really the only trading opportunity that I'll take that has an inverse risk reward? Because it has a very high win rate, right? Now me, I'm not an 80% trader. I'm not going to lie to you guys. I'm not 80%. I'm 99%. No, I'm kidding. What percentage of trader am I, guys? I make this as transparent as possible. I tell you guys every day, right? And obviously I don't do it to brag. Yeah. Historically, I'm a 55% trader. As everyone on YouTube leaves the room. Oh, this guy, 55%. What the heck? Why am I wasting my time here? Why am I wasting my money in this free YouTube live stream if he's only 55%? Historically, about 55. I range between 45, 60, but historically, I've been right around 55, right? So if I'm a 55% trader, I can't take this consistently. Why? Because I'm going to lose a lot of money, right? So I need to ask myself, how can I have a better risk reward? I need to put myself in situations where my risk is very, very small compared to my reward, right? And this is why you don't want to be aggressive here, because if you're aggressive, I just put a stop loss here if I'm aggressive. It's closer, yes. It gives me a great risk reward, yes. But it's also in just a random place. And I never want to have stops in random places. I want to put stops in areas where I feel the market is going to be safe or the market is going to have trouble getting to. So instead of taking an aggressive approach and just entering at market, this is when we go down to our lower time frame, right? We go down to our 4-hour chart. On the 4-hour, you will have you can see how you can make this into a double top. 60-minute chart gives you a much clearer explanation. Now, again, for me on the 60, this is not technically going to be a 26.18 because it's technically not a double top, right? Price action did give us a higher high, higher close here. I remember talking about this. There was a video I did on YouTube, and I know you guys watched every single one of my videos, so you know exactly what I'm talking about, right? If you haven't, make sure you go back and do it. There was a video on YouTube. We were talking about the Euro Aussie, and we're talking about a trend continuation opportunity or a counter trend trading opportunity on the Euro Aussie as price action came back into structure. And I said that, hey guys, higher time frame, right? We have this descending triangle formation, right? That's a dangerous formation because typically it breaks out to the downside. So it was something like this on the higher time frame, right? Where the market was doing this. So I don't want to be super aggressive with my entries down here because I know I'm going against what the higher time frame is showing me. Right. So I want to be conservative and wait for a double bottom. And I got a question from a trader saying, well, why don't you just enter at market and do that? And it's because we want to see that confirmation. So because we have the higher high, higher close here, this is not technically a double top. So this is why it wasn't technically a 26.18 trade, but we looked at it the same way. We looked at it as a structure-based trade. And I'm not a 26.18 trader, but I do trade structure and price action. We looked at the market coming here, coming there, right? Coming right back below our previous structure shelf, coming back up into it. We had a lower low, lower close up in here or down in here on the 15-minute chart and got short. So that's the very, very long way of answering that question. I forgot who Bonnie answered it or asked it about entries. I'll look for that lower low, lower close. In a kiss of death situation where we get like a pin bar and a doji combo, something like that, I can enter aggressively right at the top. But typically I'll look for that lower low, lower close, especially if we come higher up into the zone. If we're lower in the zone, maybe even a double top, double bottom on a lower time frame. Remy says it's a bit like dollar yen long from last week. Nowhere where we broke above the 4-hour, but held in the daily. Yeah. And I'm still kicking myself in the butt, man. I know I followed my rules. It was a good trade. We made some good money off of it. That was a 60 pipper. But that thing ran, man. That thing ran another 60 pips. But I guess in hindsight, it never got to the extended targets. Let me go back to dollar yen. It never got to the extended targets. So we would have been taken out on break even, right, Remy? On second positions. Yeah. So we did do the right thing. We had a trade right here. We had broken and closed above structure on the 4-hour, right? This is going to be a bigger potential bat formation up here. So this was on the daily chart. This is what we're looking at. You go to the daily. This is a dollar yen daily chart. Daily chart, we're looking for a potential advanced pattern formation. This is called a bat formation. And if you guys are new and all this terminology doesn't make sense, that's perfectly normal. Typically what I tell my live room members is it takes about 1 to 2 weeks in the live room before things start to slow down. Now we're not really doing any analysis of charts right now. We're kind of just talking, but typically if it seems a little bit fast and like you're overwhelmed, that's perfectly normal. But we're looking on a daily chart for this potential advanced bat formation. And I really start putting these pattern formations on my radar once we break the B leg, right? Because that's previous structure looking left. So we had broken and closed above the B leg on the 4-hour, but not on the daily. So we were in a weird position where it's like, this is a trend continuation signal on a 4-hour, but not really on a daily. And we had ended up getting long right here. We had a beautiful double bottom. Look at the wicks, right? Look at the flick of the wicks on there, right? Testing, pin bar after pin bar after pin bar. We got long right here. And what I did was I wrote it up for a retest of previous structure highs right here. Now I took a 1 in, 1 out approach, meaning that I only had a single profit target. Typically I'll break aside from the syndicate for my personal trading, I'll break my targets up into different levels. So in a situation like this, if everything were lining up, I would have a single target here, take half my position off and have a bigger target waiting up at wherever I project price action to go, which in this case would have been structure or the advanced pattern formation. So it was a pretty decent, we talked about risk reward earlier. Check this out, it was a pretty decent risk reward. We got involved here, stops, something like that. Target ones, something like that. I know it's a little small, some apologies. And then target twos, I would have been going for the home run. I don't go for home run trades much, maybe a few times a year, but this would have been one of them if it lined up correctly. Again, unfortunately, it didn't. But this is what the longer term trade would have looked like. Now, after we hit target ones, right, the market kept rallying up, and of course, we're like, no, I should have went for target twos, right? We all know how hindsight works, guys, right? Traders know all about hindsight. Where you look at a chart, you're like, oh, coulda, shoulda, woulda. Have you guys ever been there? Coulda, shoulda, woulda. Oh, I knew I should have done that. Oh, I wish I would have. Oh, I was supposed to, right? And it's always coulda, shoulda, woulda in the best scenario. Oh yeah, I would have taken targets right there at the very highs because that was a Friday, and I would have closed out at market at precisely 9:15. We always do that. But of course, and I know I followed my rules. I kept saying that, and deep down in my heart, I'm like, followed my rules. We did the right thing. You traded it the way. It was an A+ trade. But when you see it go up another 60 pips and essentially double your original target profit, you're like, ah. But now that we look at it, I have a very short memory. Now that we look at it again, guess what would never have happened? Right? We never got that follow through. I would have been stopped out for break even. Right down here. Basically cutting my profits in half. So again, a good example of, hey, it may not seem like it at first, but following the rules actually saved you some coin. Saved you some coin. I'm long pumpkins. They're everywhere. No, sell them. Sell them. Halloween's over, Tony. Sell. Akil, my charts seem to be a bit off. The candle closes not line up with the next candle open. Is there something, a pip difference in between? Are you on a traditional chart, or are you on a range bar chart maybe? If you're gapping every candle? That's the only thing I can guess. If not, you have to check with your broker or your data provider on that one. Raul, we just looked at New Zealand dollar. We got a bearish Gartley formation. It's technically invalid though. So I don't know if you still want to get involved. Obviously follow your rules. Normal charts. Yeah, I would check with your data provider then. If you're gapping each candle. Yeah. Gold is dropping as well, guys, you said? I like that for the prediction I made. It makes me look good. But personally, I'm long gold, so I don't like that. But that's much longer term. All right. Yeah, the stock market, you'll gap everyone. You shouldn't have that in Forex. We won't gap everyone, but you know what I'm saying? So if you have secondary targets, Todd says you don't move stops. You do. This never would have given us, aside from right here, we never would have had a chance to actively manage it. Depends on how you actively manage your stops. You can do so at structure. That's the way I prefer. You can also do so indicator based, maybe doing like a fib dots if you have them, or a parabolic SAR. There's pros and cons to both of that. If you guys are in the 12-week transformation course, we did a live Q&A on that a few months ago, kind of going through the pros and the cons of trailing stops based off indicators or trailing stops based off just pure price action. There's no wrong or right answer. It's all, again, there's pros and cons to both. In this particular situation, there would have been no chance to trail stops aside from right here, which was essentially our break-even point, maybe 10 or 15 pips up. But there's no way to trail up here unless you're using like a fib dots or parabolic SAR. Will you be trading next week when it's the election? Yes, I will. I won't be actively trading during the results, assuming the results come out in the evening. It depends on how close everything is. But yeah, I'll be actively trading. I'm not too fearful of the election. Trading wise, I'm fearful of this election in general. because we're in a lose-lose situation, it seems like, here in the US. But trading wise, I'm not too fearful. I'm just tired of being laughed at by the rest of the world. Everyone's like, hey, Keel, who's your president? It doesn't matter. They're both bad. Ha 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 ha. I'm like, oh, come on, man. Come on. You got 4 years to do it. Come on. I mean, if you guys all just write me in, right? I'd be a horrible president. But if you write me in, I'll do some things for you. I'll remove some of those trading taxes. I won't. Presidents don't have any power. They're just a pretty face. All right. Question. Hey, Keel, just got connected. Can you please explain about the non-farm payroll negative, but euro dollar, a big bearish move? Why? Because fundamentals are nonsense. That's why. Yep. And I just offended half the people listening to this, but I said it. Fundamentals are nonsense. Now, with that being said, right, I do believe that you can be. I know many fundamental traders that are consistently profitable. So I'm not saying that you can't be a fundamental trader and can't be consistently profitable. I think as a retail trader, it's a little easier to do technicals, but that's my personal bias. But in general, here's the issue I have with fundamentals. And again, if you talk to a fundamental trader, they'll tell you the exact same thing about technicals. So it's wherever you lie is who you're going to fight for. But here's the thing, right? Good news doesn't mean a good reaction, which would be common sense. You would think that, hey, if good news comes out, we should see a positive reaction. If bad news comes out or negative news comes out, we should see a negative reaction. That's not the case at all. It's all based off the expectation, the underlying expectations of the market. Was good enough? Was bad, not so bad? And it really, in my opinion, the market already has its mind up for what it wants to do. The market already has an underlying bias on whether it wants to be bullish or bearish, whatever's coming up. The market knows right now whether it wants to be bullish or bearish the dollar. And it's already priced that in. So when you get situations like that, let's say, for example, the market wants to be bearish the dollar, right? If the market, let's say it wants to be bullish the dollar. If the market wants to be bullish the dollar, right? Good news, right, will make people feel good. They'll say, yeah, I knew I was right. It'll confirm their thoughts. Bad news, they'll shake it off. They'll be like, well, it was bad, but think about it like when you're in an argument and someone makes a point going against your point, but it's, you just disregard it because it's not in line with what you already think. You guys have been there, right? You're arguing with the wife about something and she makes a good point. You're like, yeah, but that was last week. This week is different. It's just like that. So do I think longer term, and I come from an investment background, do I think longer term fundamentals play their role and have a great purpose? Yes. I think for longer term traders, definitely investors, I think you should take fundamentals into account. For traders, right? And again, traders, we're actively trading the markets. We're in, we're out. Even on a swing trading basis, you're in and out in a couple of days, maybe a week, right? I think it's hard to make judgments off of fundamentals because I think it's hard to be consistent with them. I think it's hard to be consistent when good news doesn't always mean a good reaction. Bad news doesn't mean a bad reaction, in my opinion. But there I go. I've offended everyone. But that's why it's hard. For me, it turns into more of it turns into a guessing game, but a guessing game that for me personally, I can't test. At least if I'm going to make it, if technical analysis is a guessing game, right? Because technically we never know whether the markets are going up or down. At least I can look at historical data. I can test my guesses and see that if I have this, then historically I've been proven to be wrong or proven to be right more than I'm wrong. Do you take fundamentals into account with your gold investment? Yes, strictly. So when I invest, it's fundamental first when I invest. My long-term investments, fundamental first, and then I'll use technicals to pinpoint entries. So like on gold, it's fundamentally based, and then I check the charts and I try to see where we're at. Hey, we're retesting structure. We're retesting previous structure support, right? This is a good place to buy. Or let's say that gold is in the middle of nowhere. It's like, well, I don't want to buy right now because, structurally these clues will probably test this lower level. And then once we test that lower level, then I'll buy. So I predetermine my bias. Let's say I'm investing in Starbucks. I predetermine whether I want to buy or sell Starbucks just based on the fundamental events, based on the numbers, right? I have that confirmation bias. Then I go to the technicals for entries. So I know I want to buy. I only want to buy. I don't want to sell. I only want to buy. Once I made up my mind, then I go to the technicals. I say, okay, what price point do I want to buy at? Or what price point do I want to add on? Or what price point do I want to start taking some money out? And that's how I combine the technicals and the fundamentals. But those are longer term investments. I'm holding these things for years and years. Trading, if I'm in a trade for a week, that's too long. I want to be in and out in a few days. So it's different. It's a little bit different. It's a little bit different. Price action is very important. Why do you never talk about it? Jose, all we talk about is price action. Hey, Roy. Yeah, where have you been, man? That's all we talk about. Every day, all day, twice on Sundays. That is all we talk about. I'm a pure price action trader, baby. That's all we talk about, yeah. But we just had a full conversation on fundamentals. So if someone's new, I can understand how they just came in and heard me talking about that. So I forgive you. But yeah, I think price action is the most important thing. The candlesticks on your chart here, guys, right? This is a visual representation of everything that's happening in the market. So if I want to get a feel for the market, what's going on, the buying, the selling, I look at price action. This will tell me everything. This will tell me everything. This will tell me where traders thought it was too cheap, where traders thought it was too expensive, what levels traders are protecting or the market's protecting, what levels the market is likely to test next. If we go up, where we're likely to go. If we go down, where we're likely to go. It tells me all the information I need. That's why I don't need moving averages or Bollinger Bands or any of these indicators. I just need candlesticks. Just the language of the market. Language of love. But yeah, price action, very important to me. Price action, very important to me. Have you ever opened a small fund account? Yes, my day trading account is technically it's not fun. It's trading is my business. Trading is my livelihood. So it's not fun. I need to make money to feed my family and pay the bills. I'm not trying to be out on the street. But my day trading account is a smaller account. That's what I use for kind of passive income. So I don't touch my swing trading account, meaning I don't take money out of my swing trading account. That's the one I want to grow. That way I can up my position size and make even more profit. But the day trading account, that's the one that I'll touch. I'll take out, if we're going on vacation, or I have a real estate business as well. If we need a few extra funds to make a down payment on something, or, if we want to pay bills, Obamacare is charging us more and more now. So they're getting us. I hate that, but that's a different story. But I guess that could be considered a fun account. It's a serious account. I don't just throw money away with it. But I don't actively look to grow that account. Obamacare. Gosh, they're putting a gun to our heads and robbing us with that, man. Darren will tell you the same thing. Gosh. Yeah. Basically, they give you that's the healthcare we have. Basically, we got a letter in the mail saying, hey, in January, we're going to charge you this much now. So just want to let you know. And they do that, and you can't do anything about it. You need a good broker if you leave money in your account. Yeah, you need a good broker regardless. Yeah. Do you think they'll change rates immediately after the election? No, I'm not sold on any interest rate hikes. Again, they tell us what they want us to hear. I'm not sold on it. No. December would be the first possible date. I'm not sold on it though. Hey, Akil, all patterns come down to support and resistance and trends. Why should we complicate it to find out the patterns? Well, not all patterns come down to support and resistance and trends. Advanced pattern formations are a specific combination of Fibonacci retracements and extensions. So it doesn't, it's price movement. It deals with buying and selling, but it's not necessarily support and resistance. It's more so a specific combination of Fibonacci's hit in a certain order. Day trading account is lower time frame swing trading. Yes, yeah. Day trading. Day trading You think 5, 15-minute charts, 60-minute and under would be day trading. Swing trading 60-minute up, if you want to put it like that. Typically with day trades, you're looking to be in the trade from minutes to hours. Swing trading, hours to days. Good Q&A so far, guys. Let's want to roll through some pairs. I haven't checked any charts today, so I just want to see what's going on while the questions are coming in. I only trade Forex. Yeah, I only trade Forex. Do you believe in market makers? Yeah. Mm-hmm. I believe in market makers. Yeah. I don't believe they're specifically out to get you. I don't believe in that. Yeah, I'm in two trades. I'm short euro dollar, short New Zealand dollar. I don't believe in market makers are specifically out to get you. I don't believe that. Got my picture on their wall and they've broken into my broker's information, and they're spending hours and days finding out exactly where my stops are at. But there are market makers. There are definitely market makers. Yeah. Euro yen just going around here. Gabrielle says, so funny, when I started to learn structure trading, I had not learned advanced pattern formations. While practicing, I was constantly being surprised by price action dropping right before structure. Why? Yeah. If you're going to trade advanced pattern formations, it's very important that you understand how to read a price chart. That gets a lot of traders into trouble. A lot of traders don't think that. They think, I'm just going to learn how to trade this Gartley pattern. I saw it on Google, so I'll do it. You can't, advanced pattern formations are made up out of legs. They're made up out of moves in the market, starting with impulse legs. I talked to a trader yesterday on TradingView who shot me an advanced pattern formation he was looking at. And he asked me, hey, why is this not right? And I responded, I said, hey, that's not an impulse leg. So this trader was from the beginning, from the initial X to A move, was setting up something that really wasn't there. So it's very important that you learn how to read a price chart. If you can't identify an impulse leg or an anchor leg, right, you're not going to be able to identify an X to A. You're not going to be able to identify an A to B. So and that's why I always say you got to learn these basics first. So many traders, they go straight to what will make me money quick. I did the same thing, guys. I'm telling you, this is why I struggled for so long. I did the same thing. Even when I took my professional trading course, right? Even after I get educated, I know Jason Stapleton, he's probably listening, or Darren OG's probably telling him he'll kill me. But even when I did it, right, I went through the course and my only mindset was, what can I learn that will make me money quickest? And I graduated the course. I went through it a week at a time. I came out. I disregarded learning how to read a price chart because I had a strategy that I liked, right? I had a strategy that worked. I back tested it. Right. It was here's the funny thing. This is gonna make you laugh and maybe hit home for some of you. Right. I traded something called the Fibonacci failure strategy, which was a trend continuation strategy, a trend following strategy. Essentially, you wait for the market to do something like this, right? Impulse move, outside return, and you get on short. Simple enough, guys. Give me a yes if that makes sense. I think you have the wrong impression about Forex. Forex is a much more volatile market than anything else out there. You're going to get the most opportunity in Forex. But yeah, simple trend continuation strategy like this. And again, I never took the time how to read a price chart. I knew the rules for the strategy like the back of my hand, but I couldn't read a price chart, and I struggled. I ended up losing money and stopping. But it hit me one day. I'm like, Akil, you're trading a trend continuation strategy, but you don't know how to identify if the market is trending or not. Now, do you guys see anything wrong with that? I'm a trend following trader, but I don't know how to identify if the market is trending. Something seems odd about that. Yeah. And after struggling, after making some mistakes, a lot of mistakes, not mistakes, a lot of educational investments to the market. I went back to the basics. I remember it was the winter. It was around this time. It was late November, or it was either late November, December, and I shut down trading for the year. This is why I made that video 2 weeks ago or last week about should you stop trading? That is a personal story from myself. I had to shut myself down. I think it was right around this time, maybe a couple weeks from now. I shut myself down. I said, Akil, you got to stop. You're slowly bleeding. You're slowly bleeding, and eventually you're going to bleed out. And I went back to the basics. I went back to my course material, and I spent a month and a half going through it the right way. And I really took time to learn about how to read a price chart, the ebbs and flows, new structure highs, new structure lows, outside returns, structure, support, resistance, right? I really took my time just not worrying about a strategy, not worrying about how I can make money. Because honestly, I thought my Forex trading career was over. I was filling out applications again. But I went back to the basics and I learned how to read a price chart. And I started over from that. And that is the most important thing I've done in my trading. Right? Think about it like building a house, guys, right? You could have the prettiest house in the world. If you don't have a solid foundation, it's only a matter of time before it crumbles. Only a matter of time before it crumbles. Spend time building your foundation. Get it nice and sturdy. And that's the stuff that people don't see. You see all this fancy stuff on YouTube videos, and probably by myself as well, about doing this and doing that, right? You don't see the foundation of the house. It's underground. You don't see the hard work and the effort. The small things that a trader learns to be successful. That's underground. But at the same time, it's the most important thing you can do if you want long-term success. And when I'm talking long-term success, I'm talking decades. Because if you're thinking 1 or 2 years is long-term success, you're wrong. I remember we had a mastermind meeting out in Kansas City, and there was a trader in our mastermind group, and she said that she was a successful trader for 5 years. I forgot the numbers, but she took maybe like a $10,000 account and grew it to like 50,000, something ridiculous. And then she blew it all in a year. 5 years of success and then blew it all. You never know when that storm's coming, but it'll come and it'll get you. And that is my biggest fear. I've only been successfully trading for about 6 years. So I still fear that, hey, it can go away any day. And that's what keeps me working as hard as possible. I think I work harder than anyone else. And I hope you guys feel like you work harder than me, but I feel like I work harder than anyone else at mastering my craft, because I'm so fearful that's going to go away one day. I'm so fearful that one day I'm going to wake up and just not have it, and I'm going to lose everything. And guess what? My life is built off of trading, guys. This isn't like a salary job where if I get fired, I get unemployment. I don't know. That doesn't happen. If I can't trade, I don't eat. That's the way it works. Charles, I'm sure Charles is nodding his head with me. If we don't do our job well, it's going to be very, very hard to provide for our family. And that's the drive that keeps us going each and every day. It's for me, it's fear. And that's just the motivational factor that I use. I don't know. I like fear. It's different for different people. I like fear. I like having my back against the wall. I like knowing that if I don't do my job, I'm done. That motivates me. For other people, it may be success. Some people may be motivated by, hey, I want to get this. I want to get that. I want to buy this. That motivates some people. That's just not me. I like pressure. Pressure makes me perform my best. But that's a little bit, here you go. We got all personal. That's a little bit into my mindset. And that's 100% real. It's not a negative. I don't think I'm going to blow my account, guys. That's a very, I don't think that's ever going to happen. But I tell myself what I need to tell myself in order to do what I need to do. All right. I missed a lot of questions. I'm sorry for that, guys. We rant all the time. Akil, does moving averages 21, 34, 55 work similar to 23, the Fibo 23, 38, and 50? No. Moving averages and fibs are completely different things. How do you identify trend? by reading a price chart. Again, for you guys on YouTube, right? I know many of you knew. Go over to our website, tradeempowered.com, right? At the top, there's a thing that says learn to trade, right? Let me see if I can bring it up for you guys. At the top, right? Can you guys see it? I know YouTube's on delay. Go to tradeempowered.com. At the top, tab that says learn to trade. Click on that. If you haven't done so already, watch this. This teaches you how to read a price chart. If you guys attended Charles's live event last week, Keystone, or 2 weeks ago, same thing. Watch this. I'm not a fan of moving averages. I don't care if you use them or not. I'm not a fan of them, right? Indicators in general are lagging. So indicators will tell you what's happening after it's already happening. There is a place for them. So I'm not saying they're pointless, but if I'm going to learn, if I want to identify a trend, I want to do so by reading the candles. I want to do so by reading the ebbs and flows of the candles. And again, price action will tell me everything I need to know about the markets. Tell me everything I need to know about the markets will come from price action. My account came back to where I started this year, which is not bad than last year. Hey, break even is good. Think about 90% of traders are failing. So if you're break even, you're still in there. I'm just bouncing around random pairs, guys. We're not gonna have too much more time in here. Again, I just want to do more of a Q&A. Not too much analysis. Bro, Aussie. Mm-mm. 786 1414 1414. Come on, baby. Oh yeah, oh yeah. He's so good. Boom. Look at that. There we go. Not bad. Keel, how many trades have you collected for pattern back testing? Thousands. Too many. I did my back testing like 3 different times because I was an idiot when doing it. So thousands. I've looked at thousands of trades, thousands and thousands of trades. We're only going to be live for probably a half an hour max. We'll probably close things up in the next 15 minutes. I don't want to hold you guys too long. Gregory, I missed it. But hey, for you guys in the live room, thank you for helping these other traders here. What was your question, Gregory? If you can type it in again, I'll answer it for you. I'm sorry about that. Learn the basics of trading, back tested strategy. Hey, take care, Stefano. Have a good weekend. Can we view Aussie dollar? Sure. Let me know what question you have about Aussie dollar. I'll do my darndest to answer it for you. Aussie. Does anyone ever do a live seminar on swing trading? We used to. We do everything online now. It's just more efficient. Understand, I'll bring a map up for you guys in the room. This is going to blow your mind. Look at where your fellow live room members are at. And I don't know if I can show this to, let's see if I can bring this up to you guys on Google or Google, YouTube. YouTube, Google, yeah, same thing, right? Let's see if I can show you this. We're tracking from all across the world here. So whenever we used to do live seminars. That's how I met Charles. I remembered his handsome face. He's so handsome, Charles. But no, I honestly remember Charles at one of our live events because Charles actually came up and he was like a sponge. He came up and he was asking questions. He was pretty direct. He came up and he was, it was funny, even if he wasn't, and this I'm pretty good at reading serious traders. Everyone's there is serious, but Charles would come up in the conversations with other people and he would just sit there, right? He would stand there. He had like a notepad with him, if I remember correctly. He would just sit there and take it in. And you can tell, like, he was there for business. He wasn't there to play around. He was there to learn something. And that was pretty cool. And I remember Charles for that, because he was one of the only ones dressed in like a suit, a suit and tie, or like a suit jacket. But yeah, we don't do that anymore. We used to do it. We used to combine it with our mastermind meetings. We do like a live week event where we'd have our mastermind meetings for the first 3 days and then a live event for the next 2 days. And we take you out, we wine and dine you. We show you how Americans eat. We eat a lot and we waste a lot. That's how we get down. And then we'd have like a social or afterwards, or a kind of a casual beer, wine, some little food, and just get together and talk. But it's tough to get people around the world for 2 days. I mean, we had people flying in for Australia. I remember we had a woman, Julie, used to come in and she would just make a trip out of it. Now she's pretty well off, I would assume, but she would go to Chicago for 3 days, then go to New York for 2 days, and then finally head down to us. But it's hard to ask people to come out all the way to for a 2-day seminar, especially when they're in different countries. So online works the best. But you can see it's pretty decent how we have people from all over the place. All over the place. How about how many would you suggest for each strategy of each pair? I would say at least 100. At least 100 trades per pair per strategy, I would say. That's a good amount to have. 5 years, if you can, if you're on higher time frames. Akil, how would you go about creating a trade plan that suits you personally? The first step would be to make sure you're trading a system or strategy that meshes with your personality. For example, I'm primarily a counter trend trader, just because I believe a lot in support and resistance. In order to be a trend following trader, again, something like this, in order to be a true trend following trader, I do a lot of trend continuation, but in order to be a true trend following trader, you've got to shoot for the extension of the trend. Now, again, structure is the biggest part of my trading philosophy. So it personally bothers me, if I'm going to be a trend following trader, it bothers me to know that I have to break through resistance. I have to break through what I feel and view to be very, very important if I want to be right. And this is why trend following never suited me, because every time the market would get to this level, I would get very frustrated. I would be inside a trade, but then the other part of my brain would be like, sell, 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 structure, structure. And, you know, markets don't typically just blow right past. They come here and then they do this, they do that, and this would just eat me alive, because everything in my brain would be telling me that structure is holding, I should be short, but I had to hold a position. And that just didn't, it made it very complicated for me, and it opened me up to making a lot of mistakes. So I would say the first thing is finding a strategy that meets your overall philosophy of markets. It's probably gonna be a butterfly formation here. Yeah, a couple butterflies. You know what I didn't? I didn't install that new pattern assistant, Charles. I need to do that. Todd's email is just sitting in my deal here. All right, a few more questions that we'll call today. I got to get this charity run in. For you guys that haven't known, if you're following us on Facebook or anywhere, we've been doing, for the month of November, we're doing a charitable event for the Chestnut Treehouse Children's Hospice. So a place that takes care of children and families of children that have terminal illnesses. So we're trying to donate as much money as possible. We're running as many miles or kilometers as we can during the month of November. I don't know. There should be a link. If you go to, I'll see if I can shoot you a link real quick. But if anyone wants to donate, feel free. It's a great cause. They're just support by sharing the word. I'll get you a link in a little bit. Chestnut Treehouse, 1,130. That's the goal. But we'll do a few more questions and then we'll call it a day. I'll let you guys get on with your Friday. As soon as I find out, as soon as I get this link up. Here we go. Jason Greystone's already ran his legs into the ground. There you go. Here you go, live room members. Non-farm payroll jobs numbers, essentially. It's the biggest consistent news event that we have in the Forex market. Kiwi traders, we got a potential advanced pattern setting up on the Kiwi as well. Again, this may be a butterfly too. Another butterfly. What is the meaning of life? To enjoy and to help others become better. Have fun and help someone else. Beer would fall into the having fun part, Tony. I'm not against that. Hey, take care, Abdullah. What's my best 5K time? 18:30, I think. Maybe 19 minutes. Then it gets progressively worse as I go to 10K and marathon and stuff like that. My marathon times were horrible. Ugh. Love your neighbor. Yeah, I do believe that. Look, life is about giving back, though. You should do so. And I'm not telling you guys how to live. You can do whatever you want, obviously. But I do think that your goal should be to have some type of impact on someone, even if it's in the smallest way. That's one of the reasons I love coaching, not just traders, obviously. I have a direct effect that way, but I coach track and field. The great thing about coaching track and field is I get athletes, I get really people during that interesting period of life where they're at college age and a lot of molding can happen. So I take a lot of pride in helping, helping develop boys into men, helping women or girls become women. So impact somehow is great. Patrick says, I use a very simple strategy, has an 80 to 90% success rate. Nice. The key question is it profitable? You'd be surprised. There are some traders out there that have 80 to 90% success rate, but lose money. So is it profitable? That's the main thing. Harvey, why you gotta ruin stuff, Harvey? You got a nice clean chat going on. I've done triathlons as well. Yeah. I've done one Olympic. I've done a few halves. Akia, what if we use candles for entry and exit and SMAs for confirmation of trend finding? You can. I'm sure you can make a profitable strategy out of that. You can make a profitable strategy out of almost anything. Honestly speaking to you, you can turn almost anything into a profitable strategy if you tweak it enough. So yeah, you can do that. You can do it. Eric says, best advice to come up with a trade plan if we can't afford the 12-week training at the moment. Just have write down very specific rules for your rules-based trading. Just be as specific as possible. We try to put everything into the if-then thought process. So make your rules as specific as possible. That way you make sure you're following them and you're not just trading whatever. Consistency is the key. So you got to be consistent in the markets. If you don't put in consistent action, you won't see consistent results. Traders get in trouble because they're looking at different things every day. One day they're looking at double tops. Tomorrow they're looking at ascending wedges. Next day they're looking at cup and handles. So there's no consistency. And while they're spending time looking at cup and handles, they're missing the double tops that would have won. Now they go back to looking at double tops. Now the cup and handles that would have won and they missed that. So consistency is the key to anything. Oh, I hate you, Remy. Akil, do you ever feel kind of empty and need to get with your mentors to recharge? All the time. All the time. And I mean, luckily it makes it easier for me that I surround myself around traders, around positive traders, not the negative traders, but I surround myself around positive traders. But yeah, all the time. I talk to Jason, I talk to Todd. I go back to my mentors. They will always be my mentors. So if I ever have a question, I'll go back to them. Or for me, I like reading books too. I like finding not really mentors that way, but different traders' opinions on the subjects by reading a lot of books when I have time to. Yep, no problem. Swing trading, day trading, same thing, just different time frame. So same concepts, just like it's same thing, different time frames at all. That's all. No, I don't mess with any cryptocurrencies. I've checked out a Bitcoin chart once or twice, but I don't trade any of that stuff. Thanks, Chad. You guys give even more. You guys give it even more. Not going to be a bat to me. We just missed a 50% retracement. But if you require a 3D2, then you'll be fine. Not going to be a bat formation for me. We don't quite hit that 50%, which is what I need for my B leg. But if you require a 3D2, right up here at 145.40s. Appreciate it, Chad, though. Appreciate it. But you guys help us. You guys came in close my deal here. There we go. What book would you say beginners should read first? Here are the 3 books that I always recommend you should read. And these are not the only 3 books you should read, but the 3 I think are important for every trader to read. In no particular order. Trade What You See. Nope. That'd be a 4th. Trade What You See would be 4th. That's a good one. Trading in the Zone by Mark Douglas. Market Wizards by Jack Schwager. I actually started enjoying the new Market Wizards as well, a little more Forex related, but definitely the first Market Wizards. And One Good Trade by Mike Bellafiore. 3 books that I think every trader should read. And there are a lot of other good ones after that, but those are 3. This does Gonzalo, but I wouldn't look at this as being the C leg because of this deeper. This is the deepest retracement, the deepest pullback. Do you trade Forex with leverage? Of course. I can't see how you can't trade Forex without leverage. Unless you've got a massive trading account. Do you take many patterns on the 15-minute chart? Yep. All right, Charles is out. Yep. Let's do 2 more minutes. I'll put the clock on 2 more minutes, and then we're gonna head out of here. We'll do 3 minutes. I'll find some cool exit music for you guys that are staying in the live room here. I don't know what I have loaded up. Now we played the fire song yesterday. Trade What You See is by Larry Pesavento. One Good Trade is by Mark Bellafiore. Do the pay me one? You guys want that? Give me pound, give me euro, give me yen. Give me pound. All right, I'll load it up. That's in the archive somewhere. Who's that? Miguel, right? Give me pound, give me euro, give me yen. Where you at, Miguel? We're only supposed to play that on profitable weeks. This hasn't been a profitable week. Fixing to do my civic duty and vote. Yep, I'll be voting as well Sundays. The books, Trade What You See. No, that's like, why I keep saying that. It's on my mind. We'll do that as the 4th one. Trading in the Zone. One Good Trade, and Market Wizards. Should I go 500%? 500 times? Sure. Yeah. Do it. Do 500 times leverage. 500 to 1. Go for it. How do I identify X to A legs? They're going to be your swing lows to swing highs. So your sore thumb, swing low to swing highs in the market, or swing high to swing lows, either one. Euro dollar going bullish? Question mark. It's not up to me. It's up to the market. Up to the market. I can't tell you. Market will do whatever it wants whenever it wants to do it. All right, we're down to the Do you believe follow the astrology stuff? No, I'm not into astrology. But they've been successful traders that have done it. One of the guys in Market Wizards was an astrology trader. It just proves you can be like I said, you can be successful trading almost any type of way as long as you're consistent with it. Yes, I will. I will be trading during the elections. Yep. If the market provides me for trading opportunity that meets my rules of engagement, I will take it. I will take it. Harvey's not a Hillary fan at all. Oh, are you still planning on uploading the Matrix talk for Wednesday's live room? You know what? I will. I've got I found a recording of it. I've got a few rants that I want to upload. I just haven't. I haven't did it. I'm just hopefully this weekend maybe I'll have some time. But I do have it. I will. I will upload that Matrix rant. I feel like you guys are the only ones that's going to like it, though. I feel like the rest of the internet world is going to look at me like I'm some crazy guy. But who cares about them, right? Who cares about them? I'll upload it. I'll upload a few rants. I have that rant. I have the rant about I got a few of our rants. I just have to go through the recordings. They're 3 hours long, those recordings. So I just got to go through them and edit them and find some time to upload them. You guys are making my life harder. I miss it when I was just trading by myself. You're right, Peter. Even if you help one person, it's worth it. Yeah. It was a pretty cool rant about the Matrix and conspiracy theory and aliens, and we go down some weird places here in the live room. We go down some weird places. What is the point of people? Here's a good question. We'll end on this. What is the people charging for training? Right? We charge for training because guess what? I spend a great bit of my time in education. I spend a lot of time putting together training lessons. I spend a lot of times doing live Q&A. I spend a lot of time working with clients. I would argue that I spend more time, right? More time working with my clients in those different aspects than I do working on my own trading, right? My own trading has actually been hurt by doing education. Now, I'm all for charity, right? Me and the wife make a lot of donations to a lot of very charitable causes. I'm doing a charitable event right now for the Children's Hospice over in Sussex, up in the United Kingdom, right? But I also don't believe in working for free, right? So if I'm going to take 5 hours out of my day to work with traders, and I'm going to put all of that effort and all of that energy, and you guys that I've worked with, you can type it into the chat. I give you 100%. Jason Greystone, Charles Miles, Jason Stapleton, we give you 100%. And the service costs a fee. Now, if that being said, we understand that everyone can't afford our services. We try to make it as cheap as possible. We have the syndicate where you can sign up for $1. But everyone can't afford our services. And that's okay. That's why we have so much free content. Why do you think I put out a free video each and every week? I've got over 300 free videos on my YouTube channel. Why do you think you guys are here today? Why do you think I invited you to come join with me, ask me questions in the free live trading session? Because I want to provide opportunity for those who can't afford. Matthew says it right? Why not let's just make higher education free? Let's not pay the professors. Let's not pay your biology professor who's teaching you how to be a chemist. Let's just all do it for free. So good question. You said it in a good way. There are people that say it in a bad way, but that's the reason why. It's a business, guys. It's a business. If I'm working, I want to get paid for it. I think all you guys feel the same way. How many of you guys would go to your job if you didn't get paid for it? Probably not many. So I'm sorry if that offends people. This is not a charity. We're really good at what we do. And again, we put 100% effort into everything we do. It's not a charity. We make charitable donations, but this is a business. And we try to make it as affordable as possible. I talked about this yesterday. If you look, right, people think what we charge is expensive, and it is expensive to some. But if you look at industry standards, if you look at the other credible educational sources out there, we are one of the cheapest ones out there. You're looking at paying $20,000, right, for the same thing you get here at some places. They just market it different. We give you everything in one shot. You come to the 12-week transformation, you get everything. Other places, you get this for $5,000. Oh, but before you take this, you got to take that for $3,000. Oh, if you really want to learn this, you got to take that for $8,000. Before you know it, you're spending $20,000. So is $5,000 expensive? Or $97 a month for a live room expensive? Yeah. But if you're willing to work your tail off, it's just an investment in your future. It's just an investment in yourself. If you do what you're supposed to do, you'll make it back. Plus, and you have a skill that you can use for the rest of your life that no one can ever take away from you. And you could potentially put yourself in a position where you no longer have to rely on anyone for anything. You can choose your own path in this world. You can be as good as you want to be. Be as bad as you want to be too. But that's why we charge, because it's a business, and businesses charge money for their services. Patrick says, but I generate 3,000% a week. No, you don't. You don't. No, you don't. You don't generate $3,000 a week. 3,000%, 300% a week. You don't. Usually I'm all for not telling trader. I'm like, okay, cool. That's awesome. You don't. I'm going to tell you, you don't. Do you manage money, Patrick? I'll tell you what, if you what's your maximum drawdown in order to get that 300% a week? Because I will write you a check right now if you manage money. If you tell me, if I can give you some money, you will make me 300% a week. I'll write you a check. You can have it for a week. What's your maximum drawdown? How much does it cost you to make that 300 a week? What percentage of a hit do you take to make that 300% a week? And do you manage money? Because I swear to God, I'll write a check right now. I'll write you a massive check right now if you can return 300% a week for me. I don't care about your losing days still equate to winning weeks. Give me the numbers. What is your maximum drawdown? How much of a hit must you take to make that 300%? 10%? 10% drawdown? Look, you're dodging the question. I don't care about your strategy. I don't care what it is. If it makes 300% a week, you can be trading based on donkeys and cows for all I care. I just want the return. What type of drawdown do you take in order to get that 300%? Answer the question. By maximum, I mean, how if this is your equity curve, right? If this is 300% and this is 0, right? What's the biggest dip in order for you to make that 300%? Because that's important to me. I want to make sure there's zero chance of me losing my money first before I write you this check. So if you can give me that number, and if you do manage money, I'll write you a check. But I need to know that maximum drawdown, because I'm not going to write you a check if you say, hey, Akil, I make 300% a week, but I take a maximum drawdown of 75%. Because that means at some point you're losing a lot of my money, and that's not safe. So what's that number? Exactly. This is what gives trading a bad name, guys. Stuff like this. This is what gives traders a bad name. handle a loss. Oh no, I don't want you to lose my money. And for you guys that are going to money management, guess what investors don't care about? For you guys that are going, and I've been a money manager. Guess what investors don't care about? If you're looking to get money from people, they don't care how much you make. They don't care how much you make. Their biggest concern is how much do you lose in order to make me profit? They don't care how much you make. They would much rather invest their money with a trader that tells them, hey, I'll give you a 25% return a year with only taking a maximum drawdown of 5%, versus a trader that says, hey, I'll give you 500% return a year, but a 50% max drawdown. Because guess what wealthy people don't want to do? They don't want to lose their wealth. So when you can't give me that number, it worries me. And so I'm calling shenanigans on you. I'm calling shenanigans. I'm calling Cow Farm. You guys know what Cow Farm is? You know what's sitting out there in cow farms? A lot of BS. And I typically don't go this far. I apologize, but that's one of the most ridiculous numbers I've ever heard. 300% a week. I typically do not try to make the habit of telling traders they're not doing something. So I apologize for that, but this is ridiculous. This is ridiculous, especially since you haven't given me those other numbers. Right? I can give you numbers. We're up 40% this year. Maximum drawdown, 15. All right, we're done. Take care, guys. Thank you for joining me. This is for you guys that are in the live room. This is going to be up on YouTube. I think it uploads it automatically. So I'll see you there in a little bit. You guys have a great weekend. Remember, head over to that link I shot in. Support the Chestnut Treehouse Children's Hospice. We're running all week. Greystone has replaced 2 of his legs already, but he's ready to go.